This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, and it looks like the main reason for the strength, which is affecting all of the financial futures markets, is what appears to be a better tone to the European Union Greek debt situation. In fact, financial ministers in the Eurozone are conducting an emergency meeting tomorrow. So it looks like some deal could possibly be in the works, and that is positively affecting stock index futures with good gains this morning. Longer term, we continue to believe that the main trend is higher for the indices. Over in the currencies, the dollar index is higher, even though it should be lower in a flight to quality long liquidation move if there is actually some progress being made between the European Union and Greece as far as their debt restructuring potential deal is concerned. And yet the dollar is higher, so that has to be viewed as a sign of strength for the dollar index. Looks like the main fundamental positively affecting the dollar over the last year or so is the probability that the Fed will be raising interest rates later this year. Even though we feel that the Fed will not raise this year, that they will raise possibly next year. From an interest rate differential point of view, as far as other central banks is concerned, the Fed is more aggressive than other central banks globally. So the dollar index will probably remain strong for the first part of this year. Also seeing the commodity currencies, the Australian dollar and the Canadian dollar lower, with commodities coming under some pressure. Today we have crude oil lower, the gold market a little bit lower. Longer term, we believe that the Australian dollar and the Canadian will probably come under additional pressure. We also feel that the Japanese yen will continue to weaken. One reason for the weakness today in the yen is some pressure on the Chinese economy, suggesting that the People's Bank of China will have to add more accommodation to their banking system, which in turn is likely to put pressure on the Bank of Japan to do the same. So the yen longer term will probably work lower. And in the interest rate markets, flight to quality longs are being liquidated in treasuries. However, we feel that this may be a sell the rumor, buy the fact situation. Once a Greek restructuring deal is announced, I think that could be the low for the move for the treasury market, especially for the long end, the 10 and the 30-year issues. So once a deal is made, if that is the case, that should be the low, and that should be, I think, the next buying opportunity for the 30-year Treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.